Hello and welcome back to Agile Stromaniguru, your dedicated source for the latest updates and advanced analysis on different commodity markets. I'm Clara, and today we are analyzing a significant development in the global vegetable oil sector, the sharp drop in free on board, or FOB, values for South American soy oil. This movement is a critical signal for anyone involved in the export and import of edible oils. The primary market action we are focusing on occurred on Wednesday, December 4th, when export offers for soy oil across both Argentina and Brazil weakened substantially. This broad market correction was directly triggered by a decline in the benchmark CBOT January soy oil futures. As the futures board corrected downwards, South American exporters quickly adjusted their offers to remain competitive, leading to a broad reduction in FOB prices. Looking at the specifics, Argentina's December FOB value fell by a notable $18, settling at $1,141 per metric ton. The trend continued into the forward positions. January prices declined by the same margin to $1,126 per metric ton, while February saw the steepest near-term drop, tumbling by $22 to $1,111 per metric ton. Brazil mirrored this downward trend, with its January FOB price also decreasing by $18 to $1,128 per metric ton, confirming a widespread pullback in outright price levels. Interestingly, while the outright prices fell, the adjustments in the basis, the difference between the local price and the CBOT futures price, sent a more complex signal. In Argentina, the December basis moved from a range of -10 to -50 to a firmer range of +10 to -60. This indicated that sellers were holding firm on their levels, even as deeper discounts were being offered on the buyer side. For the forward months, January and March basis actually showed a slight firming, suggesting that despite the overall price weakness, certain buyers were willing to offer incrementally stronger bids for future delivery. Brazil displayed a similar pattern of mixed sentiment. The January basis firmed to a range of -50 to -140, indicating strengthening on both the seller and buyer levels. Although the February buyer bid remained unquoted, the March basis saw the seller side soften while buyer bids improved, confirming active two-way interest in the forward market despite the short-term price pressure. The cooling trend wasn't limited to just soy oil. Argentina's sunflower oil market also softened, with the January FOB price easing by $10 to $1,230 per metric ton, a sign of broader cooling across the entire regional vegetable oil complex. The catalyst for all this movement was indeed the Chicago Board of Trade, where the January soy oil futures contract, ticker symbol ZLF26, settled 1.01 cents lower at 51.67 cents per pound. This drop reinforced cautious sentiment across both the nearby and forward structures in South America. Now, let's incorporate the latest data and news to understand the deeper forces at play and what this drop means for the future. Recent market intelligence confirms that the pressure on prices is compounded by expectations of large South American soybean harvest in 2026. Consultancies like StoneX have, in fact, slightly lowered their forecast for Brazil soybean production for the new season, citing irregular rainfall in key states like Mato Grosso. However, even with this slight downward revision, the projected harvest remains near a record high, which continues to cap upward price movement in the entire soy complex. Crucially, this short-term price weakness is occurring against a backdrop of extremely strong long-term demand from key importers like India. Recent reports indicate that Indian refiners have been exceptionally active, securing massive volumes of South American soy oil for delivery well into the middle of 2026, from April through July. This aggressive forward buying is being driven by a strategic move to hedge against a future tightening in the global palm oil supply, as Indonesia plans to lift its biodiesel blending mandate to a higher level in the coming year. In this context, the current FOB price drop presents a temporary opportunity, particularly when considering the broader vegetable oil landscape. With Black Sea sunflower oil still trading at a significant premium over soy oil, and the future availability of palm oil under a cloud of policy uncertainty, the competitively priced South American soy oil will continue to see robust, strategic buying interest for forward positions, despite the immediate market volatility. In conclusion, while the CBOT-led drop in South American soy oil FOB values is a significant technical event, the mixed signals in the basis and the strong, fundamental demand for forward cargoes, fueled by global supply-side concerns and the attractive pricing of soy oil, suggest that the market is currently experiencing short-term weakness within a robust long-term demand environment. Traders must carefully navigate this immediate volatility while keeping an eye on the critical forward contracts. Thank you for joining me for this analysis. If you found this information valuable, please make sure to like, share, and subscribe to Ajay Astromani Guru for more in-depth commodity market insights.
सोनाक्षी की रसोई में आज की स्पेशल गेस्ट है मौसमी चैटर्जी जी।
ये जी नहीं, मौसमी आंटी।
ओके आंटी मौसमी, तो आज आप क्या बनाएंगी?
मैं क्यों बनाऊं? मैं तो गेस्ट हूँ, आप बनाओ हम खाएंगे। एक्टिंग में तो हिट हो, अब खाना बनाओ सुपर हिट।
ठाट से बनाऊंगी खाना, है ना द बेस्ट एवरीडे मसाला। आओ बनाते हैं मसालेदार छोले।
छोले
हर रोज के करी में एवरीडे मसाले, शाही बिरयानी में स्वाद का जायका।
পটল পোস্ত আর সর্ষে ইলিশ ভাপা।
everyday spices.
साफ मसाले, खुशबू और प्योर झांझ, टेस्ट से भर दे हर जुबान पे स्वाद।
एवरीडे मसाले, देश का स्वाद।
Everyday